The structure of the mutual fund, it can be either a trust or it can be a corporation. If it is a trust, it is a trust company set up. It has a trust deed document, which is a contract which states what is the investment policy, what are the objectives and constraints of the mutual fund. The structure is that it has trustees in the case of the trust. And if you look at the corporation is of course like a regular corporation, can be incorporated for the purpose of the mutual fund, and it is incorporated either in federal or provincial law, and it has a contract which says what are the objectives of this corporation, of the mutual fund corporation. In the case of the trust, we said it has trustees, and the corporation, it has board of directors. In the ownership, if you invest in a trust, you will get units. And if you invest in a corporation mutual fund, you will get shares. And the tax, in the case of the trust, tax is avoided by the company, by the trust. All earnings are passed through to the investors, and they are taxed based on the type of income received. So the tax is paid by the investors. In the case of corporation, the corporation will give dividends, and they receive special tax treatment if they meet certain requirements in the Income Tax Act. Dividends are paid to the investors, and there is special tax treatment, and taxes are paid by investors. In the voting right, in the trust, they may or may not have voting rights. In corporation, they usually do have voting rights, but again, not too sure, but more chances of getting voting rights in corporations. In distributions, you get dividends, income, capital gains coming through the trust. And in the corporation, dividends equivalent to the corporation's income minus the fees and expenses are paid out. The most common structure in Canada for mutual funds is the trust, the open-ended trust. Open-ended trust means a mutual fund company which continuously issues the units, and so it is an open-ended trust. So the organization of a mutual fund, there are several companies or sections in a mutual fund. There are directors and trustees. They hold the ultimate responsibility of the fund activities. They keep the investment objectives. The fund manager, the fund manager is not really the portfolio manager. The fund manager is a company which does day-to-day operations of the portfolio manager. The fund manager company will calculate the NAV, the net asset value. They will have fund accountants which will calculate the value of the fund on the closing. They calculate the fee and the expenses daily, and they pay monthly. And they have a custodian, and they will assign a portfolio manager who he or she or they will manage the fund. So the fund manager will do all those activities. The distributor is the in-house sales force. So you have the banks which are giving out mutual fund units to the clients. They are a distributor. The investment companies also, they are distributors. So in-house sales force of fund, securities companies, employees of trust companies, banks or credit unions, these are all distributors. The custodian or the fund registrar or the transfer agent, they keep track of all the money. Every day, millions of dollars of mutual funds are being bought and sold by many different people. So the custodian will keep track of all that money from the buyers. They will calculate the portfolio income. They will make, if people want to encash their mutual funds, they will send out the money ETF to their accounts, make sure, or send out the checks. So they do all the money handling. They maintain a record of the fund's shares. So whoever is going to get the dividend or the distribution, they keep a track of that. So they settle the accounts for the mutual fund. So next section, we'll talk about the fees.